you've been mentioning this and not a lot of people know this. You can use annuities
Yeah.
to have passive income for life. But let's break it down further. No, what's an annuity? Okay, Jess, let's talk about passive income, but not just passive income. Let's talk about passive income for life. Is it actually possible? Especially if you're working here and you need to save and invest, can you actually achieve passive income for life?
Yes.
Paano? Sige, explain it first. I've made a lot of videos about passive income, pero I want to hear your take on it. How can people achieve passive income?
Okay, so there's different ways to achieve passive income. You can buy bonds, you can buy properties, you can also buy annuities.
Okay.
But there are obviously pros and cons. If it's bonds, then there will be kumbaga may maturity yan.
Okay.
Then you need to do
For those who are not well versed, maturity means that ibabalik sa'yo yung cash after a period, okay?
So once the period finish, if there's a maturity, then you need to find your own investment to reinvest it. Okay, so that's the
parang there's a reinvestment
there's
risk.
a reinvestment
Okay, so
risk.
that you might not get the yield that
Correct.
you want also. Okay.
Correct. And then obviously there's the market movements. Depending on the interest rates, there will be an impact on that. So there's volatility rin. For the other one, normally most people will go for properties, but for properties, sometimes the issue is the size.
Meaning, pero tama yun. By the way, no, I'll just step back a bit. Passive income means that you don't have to work anymore. Your assets will work hard for you. Kasi for those who are really super basic on investing, there's two types of income. Active income is you have to physically sweat for you to make money. Hindi naman sweat, but you have to work. An ounce of effort will commensurate earnings for you. Doctors have professional fees, lawyers have professional fees, accountants have professional fees as well. Or if you're an employee, you have a salary. That's active income. Passive income is assets working hard for you, and that's what Jess is talking about. Na bonds could be passive income, and then now he's talking about real estate naman. Okay, so bakit? What do you mean by that? Na sa size?
So obviously, depending on the size of the property you're getting, you also need a bigger chunk of money, right? So I mean, in almost any asset class is like that naman. But I think the thing with properties is you need to factor in a few other things, like tenancy tax, tenant vacancy tax, maintenance, renovation, a lot of different things that you need to factor in. So the other thing is also liquidity, because when you need money, and if you cannot just extract it from the house anytime, you need to sell it. You need to wait for the right buyer at the right time, the right price.
So yun yung advantage ng bonds versus real estate or property, that if you have a bond, it's liquid, you can sell it anytime and then you get the cash agad, as compared to real estate where you need to find a buyer for you. Yes?
Yes.
Okay, so next, you've been mentioning this and not a lot of people know this. You can use annuities to have passive income for life. But let's break it down further. No, what's an annuity?
Annuity basically is a financial instrument. It can be an insurance policy or investment instrument where you get stream of income.
Okay.
Normally it's for the rest of your life. Depends on how it's structured, but usually it's like that. So some insurers, they will pay you until age 100, then they will return you the money after that. So
pero how does it work? Like bonds, kasi you San Miguel will issue a bond, you give them money, then San Miguel will pay you as a form of debt. Property investing, ganun din. You buy a property, you get a tenant, and then you get income from that. How what's my entry point? How can I get an annuity?
So the annuity basically say let's use an insurance company na lang as an example. You can either do a lump sum or you can do a regular premium, like a monthly or annual payments, right? So if you do the regular premium, the parang split over time, the minimum you need to put in probably around $160 to $200 a month, more or less. But for the lump sum, obviously it's a much bigger size, no? So basically you pay that, and then after you pay, you'll start receiving income depending on the way your policy is structured.
So, what you were talking to me when we were talking kanina, no, you said that this is something that it's not just passive income, but it's something that will give you something that's relatively risk-free. Meaning, yung risk mo sa real estate is that, oo nga, the property will appreciate, but what if no one will rent it out from you? Then you will have months that you're not earning money as well. So, this one, you said that it's invested in something that has equities. However, regardless if the market's up or down, you will never have a loss.
Okay, I think this one I need to clarify. It's not exactly risk-free, but it's definitely lower risk. Okay, because it's uncorrelated to the stock or bond markets. The entity that will be paying you is say for example in this example is the insurer. So regardless if the market's up or down, they will pay you that certain amount. It's just that the amount that they get, obviously they have to invest it somewhere to generate the income to give to you. And so that's why the projected rate of return is not really that high. Kasi,
so this is for people who want passive income pero with very, very lower risk attached to it. Hence, a lower return.
Hence, a lower return.
Okay.
The advantage is that even if there's a lower return, the big advantage is the compounding impact.
Okay.
So if you're doing that for a very long time, it will come out to be like, it's possible to generate maybe even double-digit returns. But obviously, you're looking at maybe more than 10 years of wait. And so it will be more suitable for long-term goals. For retirement goals, for example, or for if you're doing, let's say, legacy planning, you're passing wealth to the next generation, or you're doing education planning where it's you still have a more than 10 years time frame. So anything above 10 years of time frame, there's always this possibility that you can generate maybe even double-digit returns by taking some of the profits out. Yeah.
So so you said that it works similar to an insurance plan. It's like a policy. You open a policy. Yes.
Yes.
Tapos you also get an insured face amount or an
Yes,
insured.
because so in our example, we're using an insurance structure, right? So basically, what happens is that yung amount na makukuha mo, the policy will always have a death benefit because it's an insurance policy. So the amount that you will get back in case of death is always going to be higher than what you put in. So normally the amount is around 105% of whatever you put in plus any growth of the policy.
Okay, so it's insurance with investment. Yes.
Yes.
Okay, next, what most people will ask is, what differentiates this from a VUL? Because VUL is also investments with insurance, or insurance with investments. It's almost the same, right? So what's the biggest difference? And VUL, how does it give you passive income if it looks like a VUL?
Okay, so the main purpose for this is really more for income generation, not really for capital growth per se, right? So the difference with BUL is that with BUL or ILPs, you're exposed to the market's movement, whether it's up or down. If the market is up, your policy value is up. If the market is down, your policy value is down, right? And so it's possible that in certain years that you will be negative. Of course, it's also possible that you're positive in certain years. Balance lang yun. So you have exposure to volatility. But for annuities, you don't have exposure to volatility because the insurer will guarantee a base interest rate. Every single year, you get something that is the minimum amount.
Okay.
Right? And then on top of that, they will have the target return, which they usually will hit. But the target return is usually not very high because the main objective is to have a payout for a very, very long period of time.
Okay.
Right? So, obviously, for sustainability purposes, they cannot give you a very high rate of return. So, that's basically how they set it up. Kasi, it's for people who would want to generate more than the bank deposits, than the mga bonds nila over time. They don't have lessen their investment risk, make it more efficient, and so on and so forth.
The biggest question of people when they hear the may insurance component, how are the fees of this naman? Is it are the fees similar to a normal insurance policy, a VUL plan, or is it you can compare it also to just getting like a normal low risk fund?
Okay. So for the fees, right? If you're talking about the insurance portion, it's actually very low because they're only covering you around 5%, right? So it's almost nothing. It's like a bonus payout, right? So it's almost nothing. For the investment part, technically, there's no direct cost to you.
Okay, so not like parang mutual funds, UITFs, where there's like a fund management fee that you pay.
No, you don't do that.
That get
You don't do
deducted
that.
from you naman. Okay, so just to clarify, it has an insured amount, but the insurance is very low. It's 5%. The insured amount is 5%.
105% of whatever you put in.
And the fees that you pay are very low. So, ngayon, the return, I'm not sure if you mentioned this already, but you leave it for 10 years. What's your compounded rate of return for it?
Well, it depends on how you kasi okay, if you do some compounding and then you take some, I think it's easier if there's a visual aid. But
Okay.
basically, if you take some profits out over time, right? Say for example, after 10 years, you take some profits out. Technically, your exposed investment capital becomes lower, right? So and then since your income is still the same, the percentage profit is higher already. So denominator mas maliit eh.
Okay.
So over time, as you recover more and more of your capital through the earnings, it becomes bigger and bigger. But we're only talking about the earnings portion.
So
if you
so
factor
say
in the
10 years,
policy
yeah.
value, so you start 10 years. So if you doing the one like full cash version, right? Assuming lump sum. So you start off with 4.2.
Okay.
After 5 years.
Okay.
And then if you compound until 10 years, and then you take your accumulated income out.
Okay.
So that means reduced capital na. That will push to around 5.46. 15 years, it will push to around 8 point something.
Per year, this is per year. Or that's the total.
That will be the recurring yield already.
Okay, so the yield increases per year. Okay, amazing. Okay.
No, that will be so let's say if it's 8%, it will be 8% for the year that year onwards.
Okay, got it. Okay.
And then 20 years mga around 23.
Per year, for that particular
For
year.
that year
That's
onwards.
very good.
That's very good.
Yeah.
But that's assuming this. The reason behind that is because your capital exposure is already very low eh.
Okay.
So kumbaga nabawi mo na lahat ng capital mo. So kumbaga yung yield mo, if you're calculating in on your exposed capital, it will be bigger over time.
Okay.
And it's faster to do that if you do the compounding impact. Kasi may compounding effect yun eh.
Okay.
Ayun.
So it's possible so passive income for life is possible, but you need to start and put money right now
Earlier.
para lumaki siya.
You always want to do it earlier because the longer your money is being compounded, the faster it grows. Basically, it's like it's a slow start but accelerating.
Okay.
Sa stock market kasi, you can go very fast and you can crash. But in the annuities, basically it just starts very slow.
Okay.
It's more stable yung movement, and then it accelerates over time.
Okay. Amazing. So ngayon, if they want to open, what should be their first step for them to be able to open an annuity account, for them to be able to execute also? Kasi a lot of people also who watch the videos, they're asking, okay, the stock market is good, the bond market is good, but where do I start? How can I get them? What's their first step?
Well, they probably have to contact me because
Sige.
we have to take a look at what is the premium that's equivalent to their profile.
Okay.
Because it will be different for different people.
Okay,
And
so
then,
sige, what I'll do is I'll put same as before. I'll put the link below.
Yeah.
So that the assessments can be done. Pero if you're not from Singapore, they have to be here, no, to be able
we have
to
to
get
fly
that.
in. Yes.
Okay, so if you're
But
overseas,
siguro I want to add here is that one of the main concerns of most people who buy insurance is that is there medical checkup. So this one, because this is more of a wealth product, it's guaranteed acceptance regardless of your health status. So kahit na say may cancer ka, may high blood ka, lahat accepted
tsaka
yan.
siguro kasi the insurance element is very
It's very small.
So
Yes.
it's the risk.
It's more on the
The
investment
risk is
side.
not so
Yeah,
big.
correct.
So
Yeah.
ayun, that's it. This is just a very quick explanation on annuities as another option for you to get passive income for life. I know there's more pa. You can use REITs, you can use preferred shares. The options are hindi naman limitless, but it's a lot, and this is one of them. So for those who have other investments already, you can use this as another, I guess, asset class to make it grow for you. So
more like an uncorrelated asset class.
uncorrelated asset class. So I guess that's it for now. I hope this video helps you trade well, trade strong, trade smart. We're here at, we're just, the shops of Marina Bay is just here na. So ayun, I hope you guys enjoyed this video, and I hope this helps you as well in whatever you need to get passive income. Si Jess, sobrang passive income for life. Sobrang yaman, guys. Sobra. Oh. So I hope this video helps you. See you all again soon. God
See
bless.
you.